Chinese outbound foreign direct investment is growing in relevance each year and it's set to reach around $150 billion by 2015. Now, private firms have been driving outbound investments since 2008, and that, of course, an interesting dynamic that's taking place, less reliance on the state. Joining us to explore Chinese private investment into Africa, Simon Fremantle, economist at Standard Bank, joining us on the line. Simon, thanks so much for joining us. So certainly is interesting if you look at it where it is expected to go, but currently, I mean, with around $502 billion, that accounts for just around 3% of the global stock of FDI. So still very small, but what are some of the key themes and key trends that you're starting to see when it comes to Chinese outbound investment?
So the biggest shift that we're starting to see is that, as you alluded to earlier, there's been a shift in the focus of outbound FDI from the States. In the early 2000s, much of the overseas foreign investment from China was very much state-led, and as a result had certain sectors as priorities, largely extractive industries as a means to support the industrialization in China. And of course, linked to that, infrastructure was a big component of Chinese outbound FDI, and it implied a very different model. It was often backed by state capital. Often the risk models were very different to private firms. So there was a fundamental push from the state to invest in outbound enterprises. We still have found, as you said as well, that even factoring in those large investments, they still account for a very small amount of total global FDI stock, and as you said, around 3%. But what we are starting to see, and this is as China's economy itself starts to shift away from the state and towards more private levers of growth, that the private sector Chinese firms and multinationals are starting to really drive a new wave, a so-called second wave of Chinese investment globally, and that's definitely having implications for Africa as well.
I mean, so what sectors are they investing in right now? What are the potential targets that they're looking to invest in?
What we found is private companies, and this is not specific to Africa, but it certainly does have some indication for Africa as well. Chinese private firms, around 36% in the last couple of years, have invested in manufacturing globally, and around 22% in services. And then that's contrasting with 35% of state investments go to construction, and around 25% to extractive resources, extractive industries. So there's clearly a focus on manufacturing and services. As labor costs in China increase, as the input costs increase, as they look towards other emerging economies to benefit in the same way as China has become this manufacturing hub, to use that expertise to invest in potentially other outsourcing areas. And down the line, Africa will become an area for investment in that area too.
I mean, just looking at the numbers, though, as they stand for last year, they only invested Chinese firms, that is $3.5 billion in Africa, which was only around 7% of the total inflows into the continent. So if you look at the numbers right now, it seems that Chinese investors aren't as interested in Africa as other parts of the world. Or is there something that we're missing here?
I think on the one hand, that is true. On the one hand, privately at least, African industries or African markets have not been able to offer Chinese companies that scaling up potential into a more high-end industrial areas where we often lack the skills. The risk is often too high for Chinese companies from a private perspective. But what's probably more important in those moderate statistics is just the amount of investment that's not captured. Official Chinese figures only track investments that tend to be larger than $10 million by project value. Given the authorities or the regulations in China, for any investment which is outside of the country, you need to get approval from provincial authorities for between $10 and $100 million, and it ranks up according to the amount, to what level you need approval. But for less than 10, you don't need any form of official approval, and the vast bulk of private Chinese projects in Africa are less than 10 million, and therefore outside of that official tracking and reporting categories. Just one indication, and most of the investments are coming from coastal Chinese provinces, which are heavily externalized, very proficient in manufacturing. One province, Zhejiang province, has invested in an estimated 570 projects in Africa alone, and half of those have been less than $5 million in value, so just not tracked. So I think the estimates could be probably at least double what the official figures suggest.
So as you say, data slipping and numbers slipping under the radar there. So when it comes to African companies looking for potential investment, I mean, where do you see the key targets for Africa specifically going forward when it comes to that inbound investment from China?
I think from a diplomatic level, there are some pressures starting to be exerted, for example, in South Africa and China, to say, the South African government is saying we're very pleased with increased trade and investment, but we do want Chinese companies to start to beneficiate in South Africa, to start to invest in manufacturing as a means to access the African consumer market. And I think other countries like Kenya, Nigeria are offering similar sort of incentives for Chinese companies to establish a base to tap into that low-end manufacturing potential in Africa. On the other side, industries like automotive assembly, we've already seen activity here in South Africa around Chery and Geely, Great Wall Motors, all looking to establish operations in this market. Agriculture down the line will present huge opportunities, particularly in the way that Chinese companies will look to use Africa as a base to not only to satisfy very strong regional demand for food, but also rising demand in China for food. And I think that's something that could produce a lot of long-term gains.
Thank you so much for joining us for that. Simon Fremantle, economist at Standard Bank.